Warren Buffett, you know who he is, the most successful investor of all time, period. He built Berkshire Hathaway into the monster that it is today, the 8th largest public company in the world. Under Buffett's leadership, Berkshire Hathaway has returned 19% returns every year since 1965. That's pretty much double what the S&P 500 has returned and far more than any other investor has ever done. In doing so, Buffett has turned himself into one of the richest people in the world, with a net worth of over $100 billion. Yet over the last couple of years, Buffett has been restrained. While the rest of the market, the Cathie Woods and the Ray Dalios of the world, have been buying up whatever stocks they can get their hands on, Buffett has steered well clear. And over the last couple of months, Buffett has actually started to sell out of some of his positions. While he and Berkshire Hathaway were already holding a lot of cash, like a lot of cash, $138 billion, they've started to sell stocks as well, increasing their liquidity and waiting for the perfect opportunity to start buying stocks right when they reach their bottom. Now, while we don't know exactly what's going on inside Buffett's head, he hasn't been shy with his thoughts in the past, and we do know what is going on inside Berkshire Hathaway. What they're buying, what they're selling, and maybe even what they're waiting for. That's what we're going to explore today. Buffett's positions, why he's so skeptical of the market and the economy right now, and what we should be doing about it. But really quickly, if you're new here, make sure to subscribe to the channel, like and comment. We're putting out loads of videos just like this constantly that you don't want to miss out on. So what are Buffett's positions and what has he sold out of? Well, most of it is pretty normal stuff, and anyone who has kept up to date with Buffett over the last couple of years won't be surprised to hear it. There's only one new position for Berkshire Hathaway this quarter, and it's Organon & Company, which is a pharmaceutical spin-off of Merck. Now, this is Buffett's only new investment over the last 3 months, but it makes up just 0.02% of Berkshire's portfolio, so it's pretty much irrelevant, to be honest. What isn't irrelevant is that once again, Buffett has decided to forego investing in any of the 10,000 other possible companies in the world and to sit on even more cash for even longer. Unlike Cathie Wood, who seemingly doesn't pay attention to price action when she buys into a stock, Buffett will only invest in a company if the price is right. And it's telling that there are thousands of companies out there, yet only one of them was a good enough investment to satisfy Buffett. And while Buffett didn't buy into any other stocks, he did sell out of quite a lot. He reduced his investment in 8 separate companies and completely abandoned a further 3. Most of this was in pharmaceuticals, and some people are suggesting that Buffett has abandoned pharmaceutical giants like Merck because they didn't win the vaccine war. But the truth is, Buffett didn't enter these positions because of vaccines, and he's not exiting them because of vaccines either. The truth behind Buffett's exit from positions like Merck is far simpler than that, to be honest. He bought the stock when it was undervalued, and now that it's risen, he's selling the stock because it's overvalued. Buffett bought low, and now he's selling high. And he did the same thing across the board with US Bank Corp, Chevron, and Liberty Global. The really important thing to note here is that Buffett seems surer than ever that the market is overvalued. We are seeing inflation rates of at least 5% a year. In reality, even higher than that. Which means that Buffett's cash reserves and cash equivalents are actually losing him and Berkshire Hathaway a lot of money. Yet he is sticking to his guns. He is not rushing into the market. He's not FOMOing into tech stocks or EVs. He is silently sitting on the sidelines, waiting for stocks that are actually a good deal to put his cash to use. Buffett has been in this exact position for months now, and the market has only continued to get more expensive, to lose its attach on reality even further, and to convince Buffett that a correction is due, because this can't last forever. Now, I've got a great clip here from Buffett just a few months ago where he explains his thought process and why he's happy to sit on the sidelines.
Investors behave in very human ways, which is they get very excited during bull markets and they look in the rearview mirror and they say, I made money last year, I'm going to make more money this year, so this time I'll borrow, or the neighbor says, I wasn't in last year when that neighbor was dumber than I made a lot of money, so I'm going to go in this year. So they're always looking in the rearview mirror. And when they look in the rearview mirror and they see a lot of money having been made in the last few years, they plow in and they just push and push and push on prices. And when they look in the rearview mirror and they see no money having been made, they just say this is a lousy place to be. So they don't care what's going on in the underlying business. And it's astounding, but that makes for huge opportunity, just huge opportunity. I mean, I lived through roughly half, in an investing sense, about half that period. And I've had that long period of stagnation from 48, from 65 to 82, 17 years. I wrote an article for Forbes in 1979 I just said, how can this be? Pension funds in 1970 put 100 and some % of their new money in stock because they were wild about stocks. Then they got a lot cheaper, and they put a record low in, 9% of their net new money in 1978 when stocks were way cheaper. People behave very peculiarly in terms of the reactions because they're human beings, and they get excited when others get excited. They get greedy when others get greedy. They get fearful when others get fearful, and they'll continue to do so. And you will see things you won't believe in your lifetime, and securities markets. And the country will do very well over time, but you will see these huge waves. And if you can stay objective throughout that, if you can detach yourself temperamentally from the crowd, you get very rich. And you won't have to be very bright. I mean, I'm sure you are, but it doesn't take brains. It takes temperament. It takes the ability to sit there and look at something. When I started out in 1950, I would go through and find things at 2 times earnings, and they were perfectly decent businesses, and people wanted jobs at those companies, and everybody knew they were going to be around, and they wouldn't buy them at 2 times earnings, and that's when interest rates were 2.5%. I started selling securities when I was 21, and a Kansas City life insurance company happened to be a fairly prominent company in Omaha, and the policies they sold you, if you were buying life insurance from them, had a built-in assumption of 2% interest. The stock of Kansas City Life was selling at less than 3 times earnings. You were getting 35% if you bought the stock. No question about the soundness of the company. I went to the local agent. I figured, hell, I ought to be able to sell him a few shares of stock. I mean, the guy ought to understand it. I mean, he's got his whole life invested in this company. I went to the local agent who'd been with him for 20 years, and his name was Moose. And I said, Mr. Moose, I said, you're selling these policies with 2%. You may even have a few members of your own family, and you can buy into this company whose paycheck you depend on every month, and whose future your beneficiaries of these life policies depend on, and who you're selling them, a 2% investment on, and you can get 35% on your money. And he said, stocks aren't any good. And I couldn't sell you, I was a lousy salesman. I mean, well, you have to start with that. But it just blew me away. It blew me away. I thought, sometimes I used to wonder if I was nuts, but those things, the same thing happened. I mean, in 1964, the Dow closed at 864. At the end of 1981, 17 years later, it closed at 865. It moved 1 point in 17 years. Now, that's not a big move. And that, you can't believe how discouraged people were during that period. But, people were living better. So things can go on a long time that don't make sense. But they do come to an end. I mean, the internet thing, you had these companies selling for many billions of dollars that had practically no prospects of making any money. That's a bubble. But Herb Stein one time said, anything that can't go on forever will end. Now, that seems pretty, but think about that. And particularly think about it next time you're trying to do something just because the stock's gone up a whole lot, and your neighbors made money or something. You've got to be, you just have to sit and think objectively and think about, would I buy this whole business? If it's an internet company that's got 100 million shares out and selling at 100, that's $10 billion. Is it worth $10 billion? If it's worth $10 billion, it's got to be able to give you, 700 or 800 million next year. And if it doesn't give you 700 or 800 million next year, it has to give you maybe 10% more than that the year after and continue to. There aren't a lot of businesses that can do that. And people just go crazy.
Be fearful when others are greedy, and greedy when others are fearful. It's practically Buffett's mantra, and right now, I can't think of anything that's more relevant. The markets are greedy. People are throwing money hand over fist to get into cryptos, NFTs, tech companies, Chinese stocks and EV stocks, all because of greed and FOMO. The truth is that these valuations are not defined by logic or reality, but by imaginary forward PEs and promises of grandeur. And Buffett is surer than ever that it will not last. As Buffett said, anything that can't go on forever will end. If you're new to the channel and you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part by pushing this video out to more people just like you. There are also links down below in the description where you can get a guaranteed $25 from crypto.com up to $250 in free Bitcoin from BlockFi. There's also a link to the brokerage that I use most of the time called eToro that you can check out as well if you want. Thanks for watching. Until next time.